We're at the Youth Inc. State of the Markets Conference in Midtown Manhattan, and we're joined by Steve Pagliuca, Managing Director of Bain Capital and co-owner of the Boston Celtics. He speaks with us about where he's looking overseas, what he likes in the U.S., and who he wants to run his basketball team next. So for the first time, we finally seem like we have some kind of a timeline in place for the tapering down of quantitative easing. What do you feel private equity should do, and what's Bain Capital going to do?
Well, I think quantitative easing is a big question, and hopefully they'll get it right. The only thing you can do as a private equity person is make sure that you're trying to get fixed rate debt, because you don't want to be whipsawed by increasing debt costs. I hope they'll pull it off so they do it over time, so interest rates will stabilize or rise slowly, but the way you deal with that is you have to have businesses that can generate the appropriate amount of cash flow and be conservative in that cash flow.
You had said earlier during your keynote that you're kind of expecting more technology jobs to come into the U.S., I guess at a time where we're seeing a lot of other sectors lose jobs. Software has kind of been a big play for private equity so far in 2013. What do you see Bain Capital doing in the tech space?
Well, we've been an active tech investor for, I think, close to 30 years now. We think technology is a growth area. It's an advantage for the United States because we have the best and most creative software people out there. It's replicable, it's scalable, and there are all sorts of pockets of excellence from Texas to California to New York to Boston, where there are great technology companies that we can help grow.
All right. It seems like we're kind of at a point now where 5 years from now we may look back and say some factors that we might have seen as, I guess, a little exogenous turn out to be potential paradigm shifts within the private equity industry. What do you see, that could really impact the industry going forward for the next 5 years?
I think the next 5 years, obviously, we've had the last 20 years until the crash of 2008. We had a tailwind. Lower interest rates, high growth economies, a lot of global trade. That kind of reversed itself in a big way in 2008. And now you've seen, kind of a shakeout. But the best firms, as Bain Capital has, have done very well through that period. For the next 5 years, you're really going to have to increase your ability to add operating value to companies and grow companies. It's all about growing companies. I think private equity recognized that 20 years ago, and the great global firms have done that on both a global basis and internal to many of the markets.
You spent some time talking about a pretty sizable team that you've got in China. What kind of emerging markets do you see as maybe something that you're the most bullish on, 2014 and beyond?
Again, we take a long-term view, and we're really not market timers. So we're more looking at businesses that can grow and go global and have new products, and that's irrespective of the markets they're in. The markets are really a tailwind, and they're factored into the analysis, because if you're in a market like China that's growing at 7 or 8% per year, you've got a consumer-driven tailwind with you. If you're in Europe, you can't count on that kind of growth.
I have one more question. It's one that our readers really want to know about. You obviously just lost Doc Rivers, who was the coach who helped lead you folks to the finals, led you to a championship. If you could pick anybody in the history of the sport to be the head coach of the Boston Celtics next, what would you tell Danny Ainge?
I'd like to bring back Red Auerbach, and I'm sure he'll find the next Red Auerbach out there. Danny's fantastic. What he's done, he actually knew Red very well. We knew Red very well, and Danny played for the Celtics when Red was still involved, but Red was probably the almost the father of the NBA.
Thanks very much for joining us today.
Great to be here.